Jason, I am curious, as you think about commodities, a lot of analysts have said this is the beginning of a big super cycle, a fueled economic boom, huge demand. Or are you seeing this more of a supply constraint issue that's fueling the price increases?
Well, it's a few different things, Taylor, because of course commodities aren't just one thing, right? So if we think about natural gas, that's a situation where supply is tight and demand could be strong. We're not even in the winter yet, but we're in a deficit situation. If we look at industrial metals, that's been a big demand pull, especially with very loose monetary policy globally, lots of fiscal spending. And if we look at the oil prices, yes, they've come up, but they're not near multi-year record highs as we see for some of the industrial metals. So what's going on with oil? Well, that's still, demand is still being weighed down. If we look at the traveler TSA throughput yesterday, for example, was still down 33% compared to the same day in 2019 before COVID. So there's still some weak demand there. And that's the big thing about commodities. They are bought and not sold. And for oil, demand is up, but we're not all the way yet because we're not all the way out of COVID.
Jason, so much of this conversation has been about that natural gas imbalance. So at what turning point does that supply-demand imbalance start to change?
Well, the truth is that there's a lot of risk going into the winter, right? We had a cold snap at the end of last winter, and I'm based in Texas. We had, things frozen over here, the worst in a century or more. What if we get another winter like that? We're already in a deficit year-on-year inventory situation. We're below the 5-year average. Natural gas prices have been super low for a long time. But now there's actually a concern, and we're not even talking about the secular changes going forward, something reflected in yesterday's OPEC World Oil Outlook report through 2045, which is that natural gas is going to become a much more critical piece of the global power mix going forward as countries want to move away from coal to a lower carbon power source, and that's going to be natty.
You would think, yeah, and you would think that would be a big benefit here for U.S. producers, yet we tend to see a little bit of pressure on them. The idea here that maybe some of those producers aren't necessarily ready to capitalize on this environment, and others that maybe hedged the wrong way and are now maybe taking a loss on some of these rises.
Well, there are a few different pieces of this, and one of the big pieces that oil drilling in many respects is still a bit lower, a bit softer than we would expect if oil prices were higher. When oil prices are higher, you get a lot of associated gas that gets produced along with the oil. And of course, for some producers, yeah, right now there's still a bit of a risk because we've had such low prices for so long for natty. We probably need to see those nat gas prices be a bit higher sustained to see a lot more drilling activity going forward. But once we hit the winter, it's a lot more difficult to bring a lot new wells up online, especially if the ground freezes.
It was interesting. We heard from the Secretary General of OPEC earlier. He was talking a lot about the recovery in oil prices. Take a listen.
The worst is over for this pandemic, that we have passed the peak, if you like, in your own words, and that the recovery will continue. It may be slow, it may be bumpy, but we are on the path of this positive trajectory.
Effectively saying it's going to be bumpy, but the recovery is well underway. How much further upside do you see to oil prices then?
Well, for WTI, we think we could be in the $80 range next summer, especially at the end of Q1 going into Q2. That's ahead of the summer driving season. That's really a critical time of demand. And I agree with Secretary General Barkindo there. We are lurching forward. That's kind of the way I've described what I would expect for 2021 coming into this year, that we see growth and COVID risks resulting in this lurching forward activity. But as we see vaccinations rise in the U.S. and we see more vaccinations across the world, we're going to see travel activity increase. We're going to see driving demand increase. But again, we look at miles driven now, the 12-month totals down 7-8% compared to where it was the 12 months through February of 2020. And of course, the flying demand is still down. Like I said, yesterday's number is down a third compared to 2019 numbers. So we still have a long way to go, but next year is probably going to be a lot stronger for travel, a lot stronger for oil demand.
Jason, you are one of the most accurate forecasters that we track. Is there anything that the market is not looking at enough that you think they could be caught off guard by in the next 6 months?
Well, I think the big thing is this natural gas piece that people haven't been paying attention to for a number of months. I think there's now more of a focus here. But once we get into the winter, it can really go one of two ways. There's a lot of risk here, which is why we've seen, I think, a lot of consumers hedging, which pulls up the price. We get a cold winter and the prices today could look cheap. But if it turns out to be mild, the price can fall quite precipitously.